Good evening, I'm Liyana Hasannel. Welcome to Bizworld. Malaysia's stable economic growth, falling inflation and strong household finances would support the residential market in the second half of the year. Industrial real estate agency BOEPD said this is because of a range of supportive conditions, despite moderately lower economic growth. It forecasts home price growth of 1.5% and 4% during the second half of the year, compared to a year earlier. The company said Malaysia had benefited from stable economic growth mainly due to proactive measures taken by the government and wise management by Bank Negara. In the first quarter, the gross domestic product growth rate of 5.6% was driven by the private sector. Overall, 2023 growth is expected to come in between 4% and 5%, even if the global environment does not improve. Malaysia's Producer Price Index PPI, which measures the prices of goods at factory, declined to negative 4.6% in May, from April's negative 3%. According to the Department of Statistics Malaysia, the agriculture, forestry and fishing sector continued to show a negative trend for 11 consecutive months, recording negative 27.2% in May. The mining sector also declined by a double digit of negative 10.7% in May, from negative 4.7% in the previous month. The manufacturing sector marginally declined by negative 1.1% from 0.1% in April. On a monthly basis, the PPI local production posted a decline of negative 0.4% in May, after an increase of 0.2% in the previous month. Hong Leong Investment Bank research said market weakness is expected to persist into third quarter of this year, given the impending state pulls and the U.S. Federal Reserve's continued rate up cycle. It also expects growth to weaken in second half of 2023, taking into consideration the diminished low base effect, slower global growth and lingering geopolitical risks. As such, the firm retains 2023 GDP forecast of 4.5%. However, it advocates accumulating during this weakness as toppish Fed funds rate OPR spreads are in sight. This could mark a turning point for the ringgit and local bourse heading into fourth quarter this year. There are also reasonable avenues for liquidity inflows, given the absence of EPF withdrawals, stamp duty cut to rejuvenate retailers, and record low foreign shareholding. MBSB Bank targets 1 billion ringgit loan disbursement by the end of this month under the Employees Provident Fund's Account 2 Support Facility, FSA2. The amount is expected to reach 1.2 billion ringgit by year end, with the bank currently in discussion to participate in Phase 2 of the scheme.
We have a period of 1 year of offering. So beyond 1 year, I think the scheme will no longer be available. Then now we are working on the Phase 2. Phase 2 is actually for applicant 40 years and below. We should be able to roll it out, I think, soon, because I think all the parties are actually working closely on that.
He added that MBSB aims for 8 to 10% loan growth and lower its non-performing loans ratio to 4% from 6.7% by this year. On the MIDF takeover, the group expects to hold its EGM in July or August for shareholders' approval and hopes to see MIDF as part of the group by September. Petronas sees its domestic oil and gas production peaking at about 2 million barrels of oil equivalent per day, BOEPD, by next year. The national oil company stated that about 60 to 70% of its production is natural gas and will remain so going forward. Petronas aims to expand its overseas portfolio to 700,000 barrels as it ramps up output from its Canada LNG joint venture. The company owns 25% of the 14 million metric tons per year LNG Canada project in Kitimat and British Columbia. Petronas recorded an average production of 2.4 million barrels in 2022, including domestic and overseas output. That's all the time we have for Bizworld. I'm Liyana Hasannel. Thank you for investing your time with us.